We've got another Dow stock hitting an all-time high, and we've got the Fed chief going to Capitol Hill. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Bit of a roller coaster on Wall Street today. The Dow rose on reassuring comments from the Fed chief, but fell later in the day on some reports that some members of the Federal Reserve favor reducing the QE program as early as next month. Joining me to discuss this in detail in studio, Matt Argersinger and Matt Coffenheffer. Fed Chief Ben Bernanke testified before Congress today and said the U.S. job market is still weak. Because of that, Bernanke said it's too soon for the Fed to end the stimulus program. Is this the right move, you think?
Well, Chris, I don't know if you've ever sat down to play blocks with a little kid, but you start building up those blocks and they come over and just kick it all over. And this is sort of what's going on with Ben Bernanke in Congress. He's
not the kid looking to knock it over.
He is not the kid. He's trying to build things up. He wants to see the economy repaired, and then Congress is coming over and sort of kicking it all aside with these policies that are raising taxes and cutting back spending. And what it would be great, and he said this in his speech today, in so many words, in veiled Ben Bernanke speech, it would be great if Congress was working in concert with the Fed to help the economy recover.
Well, and as I said earlier, we saw later in the day, the minutes were released from the last Fed meeting, and you got some members out there saying, hey, let's start, pulling back on the bond buying program next June.
Well, Warren Buffett said that was going to be the shot heard around the world when the Fed sort of eased off the gas pedal and started, retracting some of the QE. This shows you how sensitive the market is to what the Fed is doing, and it could be a problem. I mean, for a lot of banks or a lot of insurance companies that have risen so much out of QE, they're going to be hit when the Fed sort of eases back. And ironically, those actually might be some of the best companies to buy in after that correction, but we'll see.
I was going to say, you look over the last few years, the amazing run that the market has had, and certainly banks and insurance have been a part of that. If we do see that pullback, what are you going to be watching most closely? Well,
the funny thing is that at this point in the cycle, the easy money policies aren't really that great for banks. The interest margin spread is collapsing, so it's harder for them to make money. They're not making a whole lot of loans. And we just actually had Neil Irwin here in the office talking about the Fed and talking about economics. And I asked him about who's really benefiting here and what happens with the banks. And he said what the banks really need is a recovery in the real economy, and then loans start getting going and everything starts moving in the right direction. So although everybody's looking at the easy money policy, it's really a much bigger economic picture for the banks.